Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Ice raw sugar in New York. The past key features here had been and continue to be the late April to late August descending wedge pattern, currently 21.72 right off the bottom of my daily chart, which is highlighted in dark blue on my daily chart. This morphed from an original sideways triangle into a descending wedge pattern, and back in late August the market broke out over the upper trend line of this pattern. However, the move up soon got caught within congestion from early May, late April, and from the March 2012 high at 26.20. This halted the rise, but prices have not turned back down again. Indeed, the recent late September Golden Cross has seen the short medium moving average, currently at 26.18, act as a support as recently as 4 weeks ago. Prices appear to be caught between the March 2012 high at 26.20 and the high of last April at 27.42. However, a more recent key feature has shown itself, though admittedly without a suitable follow-through so far, and that is the weekly key reversal up we had last week. Now, this weekly key reversal up punched and closed repeatedly and consecutively over the April high at 27.42, piercing the next congestion at 27.71. However, despite the repeated attempts, this next congestion at 27.71 held the market down on a closing basis, which is not what the bulls out there would have liked to see. Beyond 27.71 congestion, we have a small band 28.27 to 28.36, which contains the October 2011 high at 28.36, which looks interesting. Meanwhile, below the short medium moving average, we have the slowly rising medium moving average, currently 25.29, and the core of the recent support for the break higher, consisting of the 38.2% absolute Fibonacci line at 24.88, the July 2012 high at 2400, and the nearby recent 50% Fibonacci line, which is just a little higher at 2401. So where does that leave us now? Well, the confirmed break above and out of the descending wedge pattern gave us a primary target in the 27.25 area and a secondary target X1 in the 28.75 area. The primary target was reached in mid-September, and so far the market has shown some, if limited, interest in trying up to the secondary target at 28.75. Looking at today, well, the market has not followed on at all, as I said earlier, to last week's weekly key reversal down, and instead has set the stage for today being a seemingly reactionary key reversal down and bearish engulfing pattern. Indeed, the action since late August to date seemed last week to still be trying to form a possible wide-ranging double top. However, that doesn't look very likely now. Hence, I've drawn, but not highlighted as yet, a small October-based ascending wedge pattern, currently 26.92 to 28.16. I am not very confident on this pattern, especially the uptrend as has been pierced today, but I thought it best to show you just in case, and it might give some ideas on the downside should we have consecutive closes below it. Ice Europe white sugar in London. The break higher over the upper trend line, currently 6.89 even, back in late August of the late May to late August expanding wedge pattern, set the stage for the next move higher. This was a multi-pattern move, as the upper trend line was also the neckline of the late May to late August reverse head and shoulders pattern. Thus, a primary target for the expanding wedge pattern was in the 769 area, with a secondary hard to reach target X1 up in the 797.30 area. Meanwhile, the primary target for the reverse head and shoulders pattern, the one I had previously referred to as an out of place pattern, was in the 754.20 area, with a secondary harder to reach target up X3 in the 784.90 area. As you can see from the daily chart, the primary targets for the descending wedge pattern and the reverse head and shoulders pattern were both reached in September, leaving the secondary targets still live. However, there is a question mark over these secondary targets, as after reaching the primary targets, the market changed and dropped away. Now, the decline has been halted by a combination of the rising short medium moving average, currently at 721.30, the slowly rising medium moving average, currently 701.30, The original broken trend line currently at 689 even, and the congestion between 675 to 700 dating from July, August, and again earlier from June. This seemingly had been enough to turn prices back up, but the whole move higher has seemed reluctant to move higher. I initially thought it might be difficult with the congestion and the April high at 730.5 and the October 2011 high at 735, but they were overcome, and yet the market still made a lower high in October than it did in September on the continuous daily charts. A bearish sign usually seen. Now, nevertheless, still am wondering if we might still have a build-up of ammunition before another attempt higher or not. We do, after all, still have targets open on the top side, but we're looking to come down to that short medium moving average at the moment. Sugar white premium spread. We are in the last quarter of 2023, and this chart continues to be one of the busiest and most colorful of all my charts. Many things are still going on, all at the same time. Okay, so I had previously spoken about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart, with the market at the moment in between the lower time below, currently at 116.25, and the middle time above, currently 190.90, 190.5. I've said this so many times before, and I'll repeat it here again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack of this market. Next, we have an ascending expanding wedge pattern highlighted in bright red trend lines and above the current market. This was formed between mid-April to late November last year, currently 212.25 to right off the top of my weekly chart. To me, it was and still is not the best looking of such wedge patterns, but it's also still out there despite being tested as recently as mid-April this year, and it comes with all the possibilities such a pattern invokes. Then there is the most recent activity, and this had been around and through on occasion all the moving averages, notably the long moving average at 130.25 and the medium moving average currently 141 even, prompted by the change gap move lower of a few weeks ago. We have seen this activity push prices down through two 50% Fibonacci lines at 128.75 and 131.5, as well as the June 2020 high at 134 even, and then move back up through all of them as well. We are currently sitting just above the June 2020 high at 134.25. Now, weeks ago I drew a bullish shift pitchfork for the August 2021 to February 2023 action, and I've once again decided not to highlight it. As there are so many trend lines here, the action of this pitchfork neither adds nor subtracts from the current picture. The next point I'd like to discuss is a big picture item, and it's a look at the whole of the 2022 to date action as a possible, well, maybe 22 to the end of the third quarter this year. 22 to date, let's say, action as a possible huge lopsided diamond top, out of which prices have emerged some weeks ago. This is the pattern that is highlighted in green on my daily chart. We initially had a false break higher from this pattern, then recently a false break lower. And so far, well, the market has not decided as to which way this pattern will drive prices. I am beginning to have doubts about the whole idea right now. The final point I'd like to highlight is a monthly one, and one that has repeated itself throughout, though only the once really. We have had a monthly key reversal down this past September, though not as wide-ranging as the monthly key reversal down we saw in September 2022. Yet it's worth bearing this in mind as we go forward.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.